Vincenzo's Go Crypto Investing. Let's take a quick look at the market today after the Ohio State University criminal gangster cartel took down henchman Mel Tucker in the Michigan State Spartans. You can see Bitcoin right now has fallen below a key rising wedge level that we were watching out for right here. Earlier today when we were talking, it was up in here, and we were saying it could dance down, maybe double bottom, come back up and back test this. And if you can't pop up into here, you're going to have a huge flush down there, right? So that's what we're watching out for as we zoom out from the minute to the hour time frame. And if you can't bounce back up into there, like we were talking about earlier, right? Oh man, there's a lot of nonsense down here. If you can't get up into there and retest this 65,000 level by breaking back up into this rising wedge, and if you come back into here and you back test, right? See that? How you back tested earlier in the hour time frame? This needs to be in here. Auto. You see you broke back into here briefly into this rising wedge in the hour time frame. Now you're coming back out of it, right? Now if you start to trade back down like this and keep falling and get rejected, you're coming back down to these underneath targets, right? That we talked about at $50,000. So this is a critical spot for Bitcoin. Can you bounce into here and get some support and try to head back up to that 65,000 level? Or are you going to get rejected up here? So that's a huge Vincenzo's watch along this rising wedge, major support resistance zone that you're fighting and dancing with right now and trying to stay above it. But if you break down, unfortunately, you're coming down to the 50,069 level. If you can hold it, you can come back up into the 65,000 level. So we'll keep an eye out on this key level. Take a picture of that and keep an eye out on this right here. As you zoom in, you can see where you briefly touched in. Then you had that rising wedge look with a rounding top in a miniature fashion. And then the price came down, right? So that's what we're looking out for in the Bitcoin. The XLM is the same thing. We've been following the ring system and XLM to perfection, right? You see this right here. We'll delete all this noise, nonsense, and mumbo jumbo. Get this all out of there for you. Make it nice and pretty. Delete that. See that? Then we're going to delete that. So what you got here, as we zoom back here a little bit, you can see we told you we were going to top out up there at the upper ring at the 42 cent level. Then we told you this would be your bottom support along this bottom blue ring, right? And it happened to hit it at 37 cents. And we told you if it can't hold it, you're dropping down to the next ring. And you did. You hit it as support, came up to the moving average like we talked about. And then now you're probably going to trade back down to this ring. And if you can hold it, you can pop back up. But when you come back to this ring, like I think you are, if you can't hold it, you're going to leak back down to the underneath ring now, right? So if you can't hold the 31 cent ring when you come back to double bottom, you're going to fall through and you're going to start to come down to the next ring, which is 29 cents, right? And then if you can't hold that ring, you're going to come down to the next ring, which is slightly below there at about 27 cents. So that's what we're going to watch out for in the immediate short term, as it looks like we're being rejected by this overhead 200 like we thought we would, and we're going to come back down and trade back down to this underneath blue ring to retest that bottom on the blue ring right there yesterday. And if we can't hold this, we're going to leak down fairly quickly to this underneath blue ring at 29 cents. If we can get supported off this, then that's a double bottom off the ring, and maybe we can start to trade up, and we'll diagnose that out at a later date. But that's the least probable solution. The most likely is you come down here and touch this 29 cent underneath ring after you fail to hold support at this critical blue ring right here on a double bottom, right? So that's what's going on in XLM, the XDC. We're looking at the same thing. You can see we're leaking down, as it looks like the last time we looked at this, we were forecasting a possibility of both ways. The upper end right now has not taken place, so we're going to delete that to get that noise and mumbo jumbo out. You can see we hit something back here. The 200-day moving average, we just hit it a few days later right there. But that was forecasted from all the way back here when we were diagnosed, sniffing out and detecting this overhead resistance, this underneath support, and sort of a descending triangle. And then it broke down, and we were forecasting it to come down to that moving average, and it did. And then if we look at it, You can see that, how it leaked out of there, right? Now what's going on here is we're running up against this 200-day, and it looks like back here on October 30th, we were drawing this out, and then it came up to that 200-day, flirted with it for several weeks, and now it looks like it's starting to leak down. And if it can't gather some support, we're going to come back down to this 0.057 target. If we can gather some support and try to get bullish, we got to get on top of this descending green line and trade back up towards the 12 cents. So that's what we're going to keep an eye on. Like, subscribe, and share to Vincenzo's Go Crypto Investing. Peace and love. Peace and love.